Here's a fun misunderstanding. What's the right hand gesture to describe an accounting transaction? Bit crazy, right? People want to think that, oh, let's say we pay a liability off. Well, you take your cash and you move it over here. Or let's say the company has an initial public offering and it sells shares to investors. So the investors put the money into equity and it moves up here to cash. Or maybe even it stays over there as equity. My hand gestures, you see these hand gestures moving from one place to another? Or even if you convert debt to equity, you move it down here. That's the wrong hand gesture. Nothing ever moves from one place, from one element to another. Remember the 5 elements, right? Assets, liabilities, equity, expenses, and income. Alexi. Let me show you the correct hand gesture in accounting. Pow, pow, or pow. You see, when 2 things happen, they happen in 2 places. Nothing moves from one place to another. This is the incorrect hand gesture in accounting. This is the correct hand gesture. So if we borrow money, more cash, more liability. If you repay that loan, less cash, less liability. If you provide services to a client, more revenue, more cash. If you buy a table for cash, less cash, more table. If you do the work that you've been paid for before, in other words, you had deferred revenue, less deferred revenue, more revenue. As you're seeing, the correct hand gesture, pow.